boy, we got a lot to talk about today. There is I honestly didn't even realize that Robinhood is actually selling off by a lot here. It is 10:44 a.m. in the morning. Woohoo! Eastern Standard Time. Okay, yeah, there's just so much to talk about. I'm going to try to keep this video between 20 to 25 minutes is my goal. If you're new here, welcome so much. Please smash the like button if you find value in this content. It's entirely free. Subscribe for future content. I'm going to try and make a video every Monday through Saturday. I love talking about the stock market, so I can get a good rambling on here. Definitely check out my previous videos to kind of really get spun up about my my public profile challenge, aka my bung challenge. I may not get to that today because there's just so much to cover. But straight off the bat, for everyone that has subscribed and is watching, thank you so much. Much love and appreciation. We did pick up a couple new subscribers here too. Over 50 now, I believe 52. Going to be on our way to 100 relatively quickly. I'm a SoFi bull and an AMD bull as well too. Today's main topic is going to be SoFi, but I'm going to talk to them about SoFi in the last 2/3 portion of this video. Big topic around SoFi. I got to go ahead and talk about some obvious stuff here. So Oracle, they had earnings yesterday. Why isn't my thing showing up here? For some reason, TradingView is not doing justice to me. I honestly don't even know why. Come on. TradingView. Oh, man. This is, like, really annoying and kind of really embarrassing here. Okay, maybe I gotta pull Oracle up here. Anyways, Oracle had earnings yesterday. What pretty much happened? So, a lot of it's... And by the way, a lot of people was looking at this stock pretty much a couple months ago as pretty much like a NVIDIA and AMD run kind of pretty much starting. And it's just really sad how the stock, I am not a shareholder of Oracle, but it's very, very relevant to the chip industry. The company is having pretty much an issue of debt, revenue, potential chip spending as well, a lot of fears, and, well, it's causing a bump. Not to mention, as we pretty much see a couple months ago in September, the stock just pretty much ran all the way up, but it's given up all of its gains. So that's really number one here that kind of really spooked the market a little bit. Adobe did have their earnings yesterday. Very briefly, I haven't bought any more Adobe shares, and to be honest, I'm probably not going to, because this stock, in my opinion, is definitely going to start making another run higher. Pretty much how we've seen previously with Adobe. Once they get into a good run cycle, and once they obliterate a lot of fears, the stock can definitely move very quickly in a fast propelling upward momentum. So yesterday was a triple beat for the company. Triple beat on guidance, revenue, EPS. Their CEO has raised their guidance, which is even more bullish. This is a growing company. Not to mention, a lot was talked about how this year was a record-breaking Black Friday and Cyber Monday sales for AI spending. So, yeah, it's just really pretty much a waiting game. That's really the whole spiel on Adobe. All in all, a lot of fears within Adobe, I feel, is pretty much being squashed. And on the side of Oracle, it's pretty much the opposite, which is a little heartbreaking to anyone that is a Oracle shareholder out there. However, you got to remember, if something gets affected by Oracle, it could very well affect NVIDIA. It could affect AMD. If something gets affected by AMD, it could inversely affect Oracle. It could inversely affect NVIDIA. If something gets hit by the top dog NVIDIA, it can affect everything. So every single thing plays like a crucial role. But as for Adobe, is actually green today. Adobe should be more green in my opinion, but the entire market is basically pretty much selling the hell off. Okay, so Adobe, Oracle, real quick, tapping on what happened yesterday. Yesterday, we got, oh man. In my opinion, it was a dovish sell-off of what we're seeing right now. The markets are pretty much selling off right now. It's a dovish sell-off. And the reason being is because Powell gave us an interest rate cut. It was very much expected. Powell said, hey, the data that's going to be coming out, don't trust it. Like, that's a little shaky, because are you saying that the data is not, like, accurate or something? So right then and there, that puts a lot of fear into people's minds. Another thing, too, is that a January rate cut is not on the table. But what is on the table is that if we don't get a rate cut, we're not going to see a rate hike. So that's also really bullish if you think about it. Because if we don't get a rate cut, at least we don't get a rate hike. Powell said, yes, the labor market can very much deteriorate, and because of this, we'll be there to pretty much print money, quantitative easing. They're expanding their balance sheet, they're printing more cash, and they're going to lower interest rates. So if the data comes out in January very negatively, we could see the interest rate cut, as for a chance of January, start increasing and go higher and higher. A lot of people aren't really paying attention to that 1 month ago. The odds of a December rate cut was actually very slim, and we got a December rate cut. So right now, the odds of a January rate cut is very slim. So if everything is like, hey, it's data dependent and it's a clear-cut sign that the labor market is going to trend down, which means the Federal Reserve is just going to do these baby little interest rate cuts, why isn't the market going up? In my personal opinion, it has to do with a lot of just uncertainty, but it's fear. Once again, it's fear. And the last couple weeks, I've been talking about this like religiously. You buy the damn fear, okay? You literally had Jerome Powell come out and say, there's really like nothing wrong with the economy. I mean, the economy is overall like pretty damn solid. Yes, we're seeing some cracks in the labor market, and if it starts going down very quickly, we can cut interest rates. It's not like interest rates are at zero and the labor market's going down, because that is like, what is going on here? This does not make sense. This is a really bad thing. Hey, we're up here. We can cut interest rates if we need to. If the labor market's trending down, we're going to lower interest rates and we're going to guide the economy into a soft landing. I really was on the fence about a soft landing like well over a year ago, but I mean, it looks more and more. Well, how can I say that we're going to have a soft landing when stocks are selling off like crazy right now? In my opinion, it is a healthy pullback, and you got to remember that nothing ever goes up in a straight line. Let's take a look at Robinhood, for example. Robinhood is basically pulling back. It looks like, honestly, it could very well touch this 100-day moving average. I was buying this luxurious dip all the way down here. My average on Robinhood, on my Bung profile, my average on Robinhood is 109.53. I got to actually adjust this up. 109.53. It's not going to let me do it. 109.53. Come on, man. There we go. 109.54. Let's be a penny off here. We have ran up since theoretically this fear low of a good solid 20% now. Or if you want to go higher, you can say close to 30%. People like me that trade stocks are taking profits because a lot of people that bought down here that do not plan on holding longer than maybe a couple weeks, they're selling off. Buy the rumor, sell the news. In my opinion, we got a rate cut. Now people are selling the rate cut. Is this bullish? Yeah. I mean, ignore the red, ignore the blood. If you are a long-term shareholder out there and you just don't care, this is great buying opportunities on phenomenal companies. And the fact that Adobe is green, that's a shocker. Utter shocker here at all. AMD, I just ended up dropping a good amount of money. I haven't bought any shares today at all on my private and public account. Pretty much just watching. But I mean, overall, AMD, I ended up buying over $2,000 worth of shares. I believe it was at like $220 a couple days ago. And it's already dipping down. I don't care. I don't care. If AMD falls below $200 again, I'm buying more. I don't care. You buy the damn fear. We got the Federal Reserve behind us, not in front of us, because the Federal Reserve is going to be looking at data, and if the data is continuing to go down, then rates are coming down. Not to mention, if Powell is going to be so super conservative on these rate cuts, we got him going bye-bye early next year. We got a new Fed chair coming on in. It's going to be rockets. But before we get to the rockets, we got to get through a lot more fear and a lot more despair. So that's pretty much like the market overall, like as an update. Bitcoin broke in 90K. It's going to do what it's going to do. A lot of fear. And like I said, ignore the people running around with their heads chopped off. Just stick to your principles. If you are long-term investors in any of these stocks, all these stocks that I own, they're all profitable, great, growing companies. Honest Company is a risk asset. It's really the only risk type play, but even Honest Company is a profitable company. Okay, moving on to SoFi right now. SoFi. What is SoFi doing on the 5-minute time frame? Not a whole lot. How is Robinhood down? This is actually interesting. I honestly, did something happen? Robinhood markets have been tamed. I honestly don't know why Robinhood is truly selling off. I was more so focused on Adobe, and I was more so focused on Oracle than and also SoFi than Robinhood, but I gotta actually check into this. I truly don't know. Maybe they're just being pulled down by the broader market, but it goes to show you, if the entire broader market is pretty much pulling back, why isn't SoFi going down more? Well, SoFi, we just got a rate cut confirmed. SoFi lives on low rate cuts, so the more rate cuts go down, the higher guidance can go up for SoFi. Yes, SoFi is theoretically a lending business, so rate cuts do really matter more than anything out there. It's not just a tech company. It's really the only bear case that I am looking at for my strategy with SoFi, because if Wall Street gives SoFi a straight bank multiple, it's a kick in the nuts, and it's going to affect my long-term strategy in holding and trading this stock. Or rather, I should say, when I'm going to start taking profits on SoFi. Not trading. Currently not trading SoFi. Currently a long-time investor. But when I start taking profits, whether that might be 5, maybe 8, maybe 10 years from now, if SoFi is deemed as only a bank and something happens with management team where they go away from their fintech aspect, then I got to rethink a lot of things. However, SoFi did launch something new, which we got to talk about. And I honestly really feel, oh man, I gotta, real quick about my background. So, I'm a Marine Corps veteran. Did a lot of years in the United States Marine Corps. Damn, man, where's my EGA? EGA, where are you? Tattoos. I do my banking with USAA and also Navy Federal Credit Union. I'm also on Stock Titan here as well, too. This news came out yesterday. I'm really considering, and I'm also retired military. Did over 15 years in the Marine Corps, so I get a tremendous amount of benefits with USAA and also Navy Fed. But the amount of benefits that I get is actually nothing compared to SoFi. And I was talking to a fellow veteran of mine yesterday, and I'm like, we do get pretty decent benefits with like USAA, Navy Fed. SoFi is offering more than military-like banks. It's pretty incredible. So I'm actually really considering like doing all my banking with SoFi. I do have a SoFi account. It's not my primary like focus, but I mean, I did actually open one last year because I said to myself, well, I'm going to be a long-term investor. I might as well get into it. But I mean, this is just like phenomenal news. SoFi launches a 5% cashback rewards at grocery stores up to 4.3 APY on savings. My military banks don't even give me anywhere close to that. Like, SoFi is literally gaining members so quickly and so fast. People just really don't understand it. And this is such a bull case. Now, once again, bear case, bear argument, right? Here's a bear argument. Bear argument is that SoFi is a bank and they're not going to be ever a fintech or a true kind of like a financial institution in a way. Something's going to end up happening where a recession may come along. It's not going to be like a great financial crisis, but it's going to hit SoFi and it's going to cause them to go down very much, that it's going to wake up a lot of people like myself that are invested, and people like myself are going to be like, hey, maybe I shouldn't be so invested into SoFi. Like, we're in this recession here. This stock is just brutally being beaten. Like, a lot of my profits have just been obliterated now. Like, do I believe that SoFi is going to recover? They're taking casualties in their lending department. Man, yeah, SoFi is a bank. That is pretty much like the entire bull thesis here. But I am very much in tune with that, their Galileo, their tech platform, and also the fact that they pretty much have a broker capability as well too, which I'm considering about getting into and opening on SoFi here. Being even more diverse. They're a one-stop shop for everything. I really do love that, and I really do like that. So that's really making me feel good about SoFi's bull-like case. So we got this yesterday, which is extremely bullish. It's a great thing. It's a little irritating to a lot of tech bulls because we really want our tech platform to really take off running. And the entirety, once again, that you're seeing kind of really, I mean, looking even at like NVIDIA, you got NVIDIA down by almost 4% here, and SoFi is only getting hit by 1.22726. It really shows that this rate cut, or rather, let me say this. If we did not get a rate cut yesterday, SoFi would probably be down by 10%. Oh, absolutely. SoFi would probably be around... SoFi more than likely would have broken through this 100-day moving average. And SoFi probably would be bouncing off maybe $25, maybe $24 like area. Because it would hit them that much. The 50-day moving average on SoFi is really leveled out here, which is so beautiful. We could definitely see a good run into earnings, which is going to be here by the time you know it. I mean, honestly, I haven't even done Christmas shopping yet. So there's going to be a lot going on in the next couple weeks, and it's going to come by quickly. It's going to come by quick once we get rid of a lot of people taking profits, taking losses, selling out of positions. Another reason why stocks might be going down is because people are taking profits to pay their taxes. You got to remember that. On my private account, I am up over 270% on SoFi. Hypothetically, let's say if I needed money to pay my taxes and I'm looking at all my other positions and I'm like, crap, man, you know, I'm down on this position. I'm a little up on this position. I'm a little up on here. I'm like up by here. Ah, man, you know, I really need money. Oh, you know, I'm up like close to 300%. Ah, man, I just need a little extra money. People take profits. January, I don't want to fully commit and say this yet, but we could very well just blow a top an all-time, just blow through all-time highs in January. And we could just see a nice, really solid bullish momentum higher. Lost my train of thought here. I can't remember if it's 2024 or 23. Let's see. Pretty sure it was 23. I remember in 2023, I wasn't doing any long-term investing. I was just straight, primarily day trading. Yeah, it was. It was January 23. I did a lot of day trading. The penny stock market was booming. It just everything was booming. January 23, we had a nice year. February was pretty much like stagnant. And then March was nasty. And then we basically recovered into Q2. And one of the things that really propelled us into recovery is basically pretty much earnings. Earnings were very, very solid. And then we had a great 2023. 2026 could be very similar in a way. Actually, wait a second. I forgot. October sucked for 23. Wait a second. No, we finished at all-time highs in 23. We could see another similarity to 2023. So we really got to be patient. Overall, the market is just, it's going to do what it's going to do right now. It's just really utter fear, especially around Oracle, especially just around the chip industry as well. But I mean, when it comes around SoFi, it makes me feel even more confident because we got our rate cut. Imagine if we did not get a rate cut. Think about that as a long-term investor in SoFi. January right now, it's not guaranteed. But I mean, hey, the data that we're going to be getting next week regarding, I believe next week we have CPI coming out. Let me just go ahead and check very quickly here. Economical data, where are you? Next week data. Next week is unemployment. That's going to be big. Powell said basically pretty much, don't trust this. Okay. CPI, Thursday. Okay. So therefore, the data that we're going to be getting next week, Powell said don't trust it. Is the data going to be hot? Maybe it is. Maybe it's not. I don't know. But if Powell is saying, hey, don't trust this data, we got to wait until we get January's data, that's bullish. Because Powell is basically saying, hey, a lot of this data could be skewed because of the government shutdown. We got to see what happens in January. It makes me feel good. It makes me feel bullish. Hopefully everyone has a great day. If you found value in this video, please smash the like button like I said. Subscribe for more content. I'll see you all on a brand new video tomorrow. Later.